Hi guys, I'm Marianne Elliott from 360 Mortgage Solutions. So today I wanted to jump on and have a quick chat to you about the benefits of refinancing your current home loan. So to begin with, let's look at what is refinancing. So refinancing is effectively moving your loan from where it currently is over to a different bank or lender. Now, usually there's two reasons why a client would do this. Firstly would be, and the most common, is to save money. So if there's a lender that's offering a better product or a better interest rate, something that's going to save my clients money, then refinancing is an option we would look at. The other time we might look at refinancing is when the purpose of what you're looking to do requires us to refinance that property. So you might be looking to restructure or purchase again, and as part of that we may need to look at refinancing along the way. So what are the top 4 benefits of refinancing? Well, look, I've already alluded to the first benefit, and it is absolutely saving you money on your home loan. So as part of a recommendation, if I'm saying to a client of mine they should consider refinancing, I also share with them what I call a refinance analysis. So that's where it looks at how much the cost of moving is going to be versus what the overall savings is going to be in the first year, but also all the years included as well. And this helps the client to see sometimes they might look at the benefit, the overall savings, and think it's really not worth it. It's better the devil I know, let me stay where I am. Or they might look at it and say, that's a great savings, it's better off in my pocket, let's do it. So absolutely the core reason majority of my clients are looking at refinancing is to do with getting a lower interest rate so they can maximize their savings. Another reason a client might look to refinance is to reduce the loan term. You may have originally purchased with a loan term of 30 years and you've paid it off for say 5 years, leaving you with 25 years loan term. But you might like to lower that loan term so you again can maximize your savings. And if your income and borrowing capacity allows for it, you can look to restructure so that you can secure that shorter loan term and therefore maximize your savings. Another really common one we're seeing at 360 Mortgage Solutions is around consolidating debt. Absolutely, consolidating debt and lowering the amount you need to pay each month is a reason that we may look to refinance. But it's a little bit more than that, or there's a little bit more involved. We need to make sure that when we refinance non-secured debts, so a credit card or personal loan or something like that, we're not taking it over a 30-year term. Yes, the interest rate will be less than a personal loan or a credit card interest, but if we take it over a 30-year loan term, you are likely going to spend more money on interest than if we did a loan against your property but over a shorter term. So in that case what we would do is refinance the home loan and then do a separate sub loan underneath the home loan, still secured against the property with the lower interest rate, but for a shorter term, so that you've got the longer term on your home loan and a shorter term on your personal loan consolidated debts to again make sure you're maximizing your savings. And finally, another reason why people might consider refinancing is when they're looking at moving from a variable rate to a fixed rate. So a lot of the times when I'm doing an annual review with existing clients, we will look at what is the market doing, what are the variable rates, what are the fixed rates. In the past couple of months, not too many people have been keen on fixing, and that's because the variable rates have been quite competitive and a lot of the clients I'm talking to are of the opinion that interest rates will start to come down at some point and therefore they don't want to lock their fixed rate in. Having said that, I do always encourage people to look at the type of borrower they are, not so much what the market is doing, but that is how a lot of people feel at the moment. So now we're getting to a point where the fixed rates are starting to competitive and a lot more people are wanting to look at what are the fixed rates versus variable. The only issue is if you're with XYZ Bank who's not offering some competitive fixed rates and you're wanting those competitive fixed rates, then we need to look at refinancing you across so that you can take advantage. And again, at that point, we would look at a refinance analysis to make sure that we are truly saving you money. And finally, the other reason, which is less to do with savings, is restructuring. Now, I did talk about this earlier at the intro, and restructuring is more about if I have a client who wants to buy a subsequent property or an investment property and their current lender they're with doesn't allow for that. So whether it has something to do with their borrowing capacity and what they will allow for income, or whether it's outside of their policy requirements, it may mean that I look to refinance that current client so that they can look to do their next purchase or whatever it is that they're wanting to do in the future. So if you're thinking, is there a better option out there for me, and tell me more about this refinance analysis, you can book a fee-free appointment with myself and Tara in the office, and we can take you through what that might look like. Otherwise, guys, have a wonderful day, and I'll catch you next week.